Hey, everybody. Welcome to a bonus episode of Investing Unscripted. I'm Jason Hall. He's Jeff Santoro. Jeff, we're going to test something out. We're going to try something new here.
Yeah, this is something we've been kicking around for a while now, where we want to have stock conversations that are the same vibe as the podcast, where we're unscripted and just kind of having a casual conversation. So we're going to give it a try today, talk about a stock, not planned, not scripted, and we want your feedback. If you think this is a cool idea, you want us to do more of it, let us know. Social media, put a comment at the end of this on Spotify, leave us a review on Apple Podcasts, tell us you like it. And if you hate it, tell us that too, and we won't do it.
Yeah, good. We want open, honest feedback about this. You can email us at investingunscripted@gmail.com if that's your preferred way to contact us. Whatever is easiest for you, let us know. With that said, going forward, what you're probably going to hear when these episodes come out, instead of us just saying, welcome to Investing Unscripted, we're just going to ask the question. So I'm going to ask the question right now that I've been thinking about, and I kind of know what Jeff's probably going to say, but I want to have this conversation here. So Jeff, the question is, looking through your portfolio now, looking at your watch list of stocks, I'm curious because we talk a lot about stocks being expensive, a lot of stuff being overvalued. What is a business that you absolutely love, but the stock would have to fall a ton for you to buy it? And how much would it have to fall for you to feel ready to buy it?
So the very first thing that will always pop into my head when someone asks a question like this is Costco, ticker symbol COST. I go there frequently. I think it's just from a Peter Lynch boots on the ground way of investing. It's a no-brainer, great business to me. It's always packed. There's tons of people there. I find value in what I buy. There are essentials there that we have in our house at all times. So just from that standpoint, I always say to myself, why don't I own this? And the reason is because it trades for something like 50 times earnings right now, 55 times earnings, something insane. I think it would have to fall to the 30 times, 35 times earnings range for me to even consider buying it. I'm not looking at it right now. Maybe you can, or look it up. I don't think it ever trades for super cheap. Because it is a wonderful business, but I don't think I could pay 50 times earnings for anything, not to mention a company like Costco, which, as much as I like it, isn't exactly a high-flying growth stock, you know?
Yeah. No, I do. Actually,
it's not a micro cap trade, that's going to like 10x its revenue over the next decade. So I think with a company that mature and large, you have to be careful.
No, I think you're exactly right. And I can give you some numbers to back up what you talked about. I was frantically on FinChat plugging in Costco as you were talking, because I kind of knew, we've talked around this one a lot. I kind of knew that might be the way you'd go. But I went into finchat.io and plugged in to look at some metrics and see. So over the past 10 years, Costco stock has generated total returns. This is with the dividend they pay. They have a small dividend, and then they pay that big special dividend every couple of years, 775% in returns. It's been just a gigantic winner. At the same time, its free cash flow and price to earnings multiples have gone up a ton. PE ratios doubled, and the price to free cash flow is up 137%. So here's the thing. Like, if you went back a couple of years ago, the multiples were up a little bit. They weren't as up as much as they are now. And the stock was up like 300%. So what you've really seen over the past couple of years is massive multiple expansion. So you were saying 50 times earnings. How about 60 times earnings and 67 times free cash flows? And a lot of that's the run up that we've seen since the presidential election. So this is a stock that's gotten massively expensive from momentum, right? Investors just going into what they view as a safe stock.
Yeah. And I've shied away from retail a lot as I've grown as an investor, because, and actually I've stolen this sort of line from you. Retail's hard. And I've taken that to heart and just become less interested in owning really any kind of retail companies. I own very few at this point, but I just can't imagine I don't feel that way about Costco at all. They don't raise their membership fee very often, every 5-ish years. And I've been a member for, oh God, I don't know, maybe 15 years, probably, maybe 12, something like that. Cause I was a BJ's member before that. And then I switched to Costco, and they could double the annual fee, and I'd be pissed, but I'd pay it.
Right.
And they don't do that. They're very good about it.
Right. They just implemented their first increase in a very long time. And the first increases just started to hit at the beginning of their current quarter. And yeah, they're like, the numbers they've reported are basically, the renewal rates are essentially the same as they were before.
And it's one of those places where I will go in with a list of a couple things I want to get. And it's not just the bulk stuff. Like, they have good prepared foods and, lightly ready to be prepared foods and things like that.
Yeah.
I do wonder if I'll go there as much when like my kids are older, because a lot of what we buy is like big boxes of chips for like the pool in the summer, that kind of stuff. But
right.
I go there with a list of things, and as I'm working my way through the aisles, I'll see something that I wasn't planning on getting, but it's a good deal, and I buy. Everything about it is great. And I feel like for it to have done as well as it has in the Amazon world that we live in, tells me it's here for the long haul. I mean, I'm not going to say anything is undisruptible, but
right.
If Amazon hasn't put it out of business by now, I don't think Amazon's going to. I didn't know it was up to 60 times earnings. That's insane.
Well, it's gone on such just a wonderful run here with the rest of the market. Again, in the past 6 weeks or so. Anecdote, a couple things like anecdotally, similar experience. So we go 4 to 6 times a year, roughly, at least once a quarter, sometimes every couple of months. And we automatically, we just get 2 shopping carts. Like, we just do. Because we know we're going to end up filling up 2 carts, because one of the big things that they do so well is that seasonal section in the middle. They've got the apparel and then the seasonal stuff in front of it. And then on the other side of it, where they'll have outdoor furniture, they bring that in like early in the spring, late winter, early spring. And then it carries over into home furnishings and other, they change it out. I think that's a really smart strategy, because people are rarely price shopping. They're just buying when they go into Costco, because they realize that it's probably going to be a good price. One of the things that Jeff Bezos said was, your margin is my opportunity. It gets to the core of Costco's business model. And their business model is, we're going to generate some gross margin on the product that's going to be enough to cover our operating costs and maybe make a little bit of profit. But our profit center is going to be the memberships, right? That's the thing that's going to drive the vast bulk of our profits.
Yeah.
And when you start from that business model, it keeps you laser focused on driving costs down and being a really good buyer.
Well, yeah. And a couple things too, like, they're also, if I'm remembering from listening and reading other people's kind of write-ups and podcasts about why it's such a wonderful business, right? They have a low number of items in the store, like not a high SKU count, SKUs. And the turnover is crazy fast, right? So they have a lot of leverage in like the
inventory turns. Inventory
right?
turns is massively value driving thing that they do.
Right. So, but what I've noticed recently, which just makes me feel good and by the way, the membership thing also cuts down on theft and things like that. But what I've really appreciated is they've now put the scanners at the door, at least the one by me, where you scan your card as you walk in, not just show it, and it pops up a picture of you. And if you're not that person, they stop you and they're like, don't even bother coming in, because you're not gonna be able to check out. So it just saves the headache of like being behind the person who's got a cart of stuff and can't buy it. Right. But they really take the membership thing seriously. Like, they always have. Like, you can't like take your mom's card and go, unless she's with you. And I don't know, just again, anecdotally, I think that's brilliant. Like, they're defending the one thing that they know is not the one thing, but they're defending one of their biggest differentiators and making sure that it stays that way.
Yeah. Well, there's no mission creep, right? And I think that's at the core of Costco's success. They haven't started chasing other things to try to create value. They know what they're good at. They stay with it. and they create a lot of value. So, yeah, I mean, I think largely we agree. This is a company that's kind of built to grow their sales a little more than the U.S. economy. They've got some international expansion opportunity, but holy crap, 66 times cash flows, bro.
Yeah, I mean, we talk a lot on the podcast about whenever we talk about the market, at least for the past year, we've been talking a lot about how it feels very overvalued, and we talk a lot about the mindset of being prepared for downturns and maybe keeping some cash ready for dry powder, as you like to put it, so that you can act when the market does eventually fall, because it will at some point. And for me, it's just the top of my buy list. Like, unless there's some massive problem with the business, which I can't imagine happening, like the next time we see a large market downturn, it drops 5, it drops 10, it drops 20%, I'm buying some Costco. Like,
yeah,
I think it's going to be.
Are you though?
All right. I hope I will. Like, I tell myself now that I will, because.
So what if Costco falls 25%, Amazon falls 40%?
Oh, I think I'd still buy Costco, but that might be because I don't own it yet, if that makes sense. Like, I want to be able to open a position, right? I want to make an initial buy. So it doesn't have to be the cheapest. Like, I'm not waiting for 10 times earnings. Like, that's why I said, like, if it got down to like 30, 35, that's still expensive, especially for, again, a company that grows its revenue and earnings in the single digits. But I already own some Amazon, and I find that you get, I mean, Amazon was worth buying a year ago in my mind, in terms of valuation. So I feel like I'm less impatient for that one to drop. So maybe some of this is just the mindset of like not having the thing I want. But
Jeff has Costco FOMO.
I do.
Hey, that's a good band name, Costco FOMO.
No, it's a terrible band name. You're very bad at this.
Okay, let's leave it there.
All right, let's leave it there.
All right, friends, let us know what you think in the comments. Find us on our socials too. Let us know what you thought about this idea, and we'd love to do maybe one of these a week, a few a month. Let us know what you think about it. Ideas for something different. All right, Jeff, we'll see you next time.
See you next time.